Hey folks, Kevin here. Well, it's September 24th, 2020, and today I thought I'd make another video on investing. And this is actually a video that I think there are three things that I think, three areas of importance that I think we need to get sorted out before we decide to start putting our money into investments. And they are your goals, your current personal financial status, and your behavior, your emotions. And again, one of the things I want to say is I'm not an economist, I'm not a financial advisor. This isn't financial advice for anyone out there. These are just my streams of consciousness, my thought processes about how I think these things are important when we're doing investing. And we'll get more specific as I make more videos and all. And some of these things I just jotted down in Evernote so I'd have a couple of things to refer to. So, getting your goals straight, understanding what it is that you want to accomplish. Now, for some of my age, I'm thinking about, putting away money so that it can pay for property taxes, insurance, meet our food needs, meeting medical needs in the future as well. But when you're young, when you're in your teens or in your 20s, even into your 30s, sometimes you just say, well, I'll start saving later on and all. And sometimes, at different ages, we may be saving up to purchase a house. We may be saving up to purchase a new car or for going to college for your kids, for yourself, those sorts of things. So I would really sit down and try to brainstorm yourself. Give yourself some time, write it down, and get some clear goals and don't be afraid of getting these goals out there and then doing research and you change your mind later on. That's absolutely fine. I'll have videos that I will talk about, saving up for an emergency fund, saving up for purchasing a home. Is that a good investment? Are there better ways of saving cash for emergency funds? Those sorts of things. But for right now, I'd say, what are your goals? You may want to live in a different part of the country, and therefore, or in a different country. You may want to start a business, and you may be, it's not really clear what my goals are. Write down the things that you really enjoy in life, because all of these things will be very important when it comes time to choosing which companies to invest in. So get a really good grasp, as good a grasp as you can with your goals, and those loved ones that you trust and feel comfortable with. Share your thoughts and goals. It may stimulate your loved ones, your friends and all. I think that would be really good for you to stimulate you to really think clearly about, where do I want to be in 5 years? Where do I want to be in 10 years or 20 years? Where do I want to live when I retire? What sort of income will I need when I retire as well? So start thinking about your goals. Start writing down a journal or get a goal list started. I think that's important. The next thing that I think is really important is getting your personal financial statement, almost like a business statement. I think it's really helpful for us to know every dime that we spend on things. Now, right now I use Mint, which is an Intuit, the same manufacturers, the same creators of TurboTax and all. They have a free online multi-platform budgeting, and you can put your bank accounts and your your credit cards, all of those into that system to get a good idea. I use that. I've got a pretty good grasp about what it is that I spend money on, and it's okay to have your own personal enjoyment fund, your personal growth fund in there, and set aside so much money for those areas. But until we know what it is that we're spending money on, because sometimes we just go through life and we may be getting a coffee and donuts every single day. Where in order to be more successful in paying down debt and having more money available for investing in the future, because when I think of wealth, I think that that's where the investment, your financial investment, can make more money than you can possibly make through your jobs. So do you have credit card debt? Do you have an auto loan debt? Do you have regular insurance? Do you have a rent? Do you have a mortgage? Do you have school taxes, county taxes? Getting these all down and getting an idea about what they're at right now, so that you can see what your expenditures, your debts are versus what your income is as well. And my dad used to say, geez, always try to meet your needs but live below your means. So in other words, if you're making $50,000 a year, it would be awesome if you could survive and meet your needs on $25,000 or $30,000 a year. That extra money could be put into those future goals and into investing and really create, and it may be much less than that, because right now you have so much credit card debt, and you need to really putting your money to work to paying down those credit cards, paying down the student loans, whatever it may be. And I'll say from personal experience, now we build our home, and but we've had a mortgage or home equity line of credit on it a couple of times. And we have had car loans in the past. We've had personal loans in the past. We've had credit card debt in the past, and those are the things that I can think of right off the bat. There was no greater feeling than the day that we had finished paying off all those debts, and it really happened pretty quickly. The rate at which we were able to pay off our debt seemed to accelerate as we got further along. We got more excited about paying off the debt as well. And up until right now, we've been debt-free. I have decided, and I'll talk about in a couple of future videos, about a couple of the expenditures that I've decided to take out loans instead of taking money out of my investment portfolio. So, but I don't recommend having debt. If at all possible, pay off your debt. But it all starts with getting a good idea of where you are, where your money goes. Are you picking up gum? Are you getting a coffee or a latte or a tea? Are you getting donuts? Are you regularly giving everybody presents, pretty expensive presents on the holidays and all? All of these things are things to really think about. And I'm not saying to totally not give presents, but there may be more personalized presents that you can give away instead of spending the money on presents. So those are just a couple of my thoughts on just getting your grasp of where you are financially, where your money's coming from, where it's going to, how much you have in savings, how much you have in debt and credit cards, how much you have in your 401k or your 403b or your Roth IRA, whatever it may be. Get it all written down. And I'll cover some more topics about your IRAs, the 401ks, 403bs, Roth IRAs, those sorts of things in another video. And the third and very, very important thing to get to know about yourself is your emotional state. Investing, all right, so let me say this. I don't think of the stock market as being a science-based representation of how well the companies are actually doing. The stock market is volatile. There's lots of people that are traders, meaning that they're looking for that short-term buck. So they'll buy in. They want to buy low and sell high. And there's lots of hedge fund managers that pump and dump the stocks. So you could see, even though the company that you're investing in may be a wonderful company and have all the signs of being very, very successful and giving you a tremendous return on your investment, Like one of the companies I'm invested in, the one that I'm mostly invested in, is Tesla. And just yesterday, the day before, they had Battery Investor Day, where they disclose what they're working on now, what they're working on in the future. And as a pre-event market, the value of the Tesla stock was increasing and increasing. And as soon as the Battery Investor Day stopped, the market started going down. It really dropped back quite a bit. It's still going down at this point, which, from having done this for a while now, I really anticipate this happening. Even though it's all fantastic news and really looks fantastic for my investments, the way that I'm looking at it is, since the money's going down right now, now's the time to buy more and more of the stock. But what I'm trying to say is that investing is very volatile, and so your whole emotional state is so important. How, the question I would say to my kids is, or to my grandkids is, how comfortable are you? How competent are you in, once you've made an investment decision, and let's say I believe that this company is going to do a 10x return in 10 years, meaning that it's going to double 3 times, or in a little bit more than that. And then it's, $1,000 stock will be worth $10,000 in 10 years. Well, it'd take a lot of work to be able, if you have enough money invested in that company, it would take a lot of extra jobs for you to try and accomplish what that investment could do for you. But because of volatility of the market, because of presidential elections, or various other events that go on, whether it's like a pandemic or whatever it is, these things can really drastically affect the volatility will be emphasized of what the market day-to-day value or week-to-week value is. Market analysts are always looking at the next month, the next quarter. That's as far as they can see. They aren't looking out 5 years and 10 years from now. They want a quick return on their buck, because so many of the people are doing various different types of techniques of investing, and I'm using that term loosely. They're really trading with the hopes of getting a really quick return on their buck. So if you'll be strongly influenced, if you're looking at the value of the stock every single day, and turning on Yahoo Finance, or you open up in your phone app to see what it is, and you see something that, oh, your stock is drastically dropping, you may have the fear of missing out and selling your stock, so that and then buy it again when it's lower, and seldom does that work out. So trading isn't the way that I'm investing. And so the suggestion I'm giving is that we need to check our emotional state and see, if I set a rule for myself that, yes, I think this company, I've done my due diligence, I've done all my homework, not relying on what other people say, and I look to hit all these different key factors that I'll be sharing in future videos, and then you decide, okay, this company looks like a fantastic company to be investing in. They're going to fluctuate over the next 2 to 3 years. Certainly every couple of months there'll be volatility in the price of the stock. Will I be okay when everybody else it's dropped 20%? It looks like you've lost 20% of your investment. Will I still hold my own and stay with that investment? This is given that you've already done all of your research initially, and you do check, I'd say the annual report of the company is the most important. Quarterly reports are important as well. But market analysts get things wrong so often that it's so frustrating, and therefore, it's like a roller coaster, or an emotional ride that many people go through. So I know I babbled on about this a bit, but the 3 areas again are certainly really getting a good grasp of what your goals are. What do you hope to accomplish? What's our lifestyle going to be like? Are we willing to live below our means right now so that we can have ourselves all set for the future and live more comfortably later on in life? It's kind of tough because a lot of the times with social media or keeping up with the Joneses, we used to say, someone's got a new player or a newer car or a newer phone, or they're going out and they're buying the rounds of drinks or whatever it may be. Those are things to think about. Get your goals and then modify your approach to management of your money based on your financial situation. So really getting to know, what is your actual financial situation? What are you spending your money on? Where's your income coming from? How serious do you want to, how much do you want to invest in the market? And I'm not talking about dollars, I'm talking about work and cutting back on some things so that you have more money to invest as well. So your goals, your financial status, and then your emotional status. How are you going to be prepared to handle the volatility? Because there are ways, if you're emotionally stressed out and all, there are some index funds, or you could even invest in the S&P 500, one of the indexes, or the Vanguard Total Market Fund. I don't, because they're not going to give me the return on investment, because that's taking the winners and the losers. And on average, you're still going to be winning over time, especially over what you're going to have in a savings account, as I mentioned last time, especially with inflation and interest rates being low. So I've babbled on about these things quite a bit, but these three topics are the three that I think are really important before you start doing some of the research and looking into some of the technologies that I'm going to be talking about that are going to change the world within the next decade or two. So if you found this video of value, please give us a thumbs up, share it with your friends. Feel free to leave comments. Oh, there was one more. I did get a question. I'm sorry, I can't remember who asked this question. How do I feel about stocks? I'm sorry, how do I feel about investing in gold and silver? I personally am not interested in the precious metals. I mean, if I were to invest in precious metals, it would be in nickel or other ones, and I'll explain that in the future. Certainly, I know tradition, people invest in silver and gold, and it's just not my style. I'm into looking for something, investing in something that's going to give me a 10x return within 10 years. And if you get a few of those investments and just one of them fails, but you've got three that were successful, that give you a 10x return, you're going to do pretty well. So you folks take care. You've got your homework. Think about things, and feel free to leave a comment, give us a thumbs up, and we'll talk to you next time. Bye-bye now.